The following is an update and technical analysis on the Nasdaq 100 futures here off the daily interval, whereas we are now witnessing a series of noteworthy advancements on multiple fronts. Specifically, we have now embarked upon a constructive trajectory with regard to diminishing price action here on the Nasdaq, whereas since creating that initial video on the Nasdaq 100, we have never and yet to break right back into that primary trading range with a scaling in process being a drop of 3% there. But now we've had a nice, pretty snapback counter trend rally here. Whereas I've added now this new 14,871 price support, multiple reactionary highs, reactionary lows, really across the board. Call it a multi-year. Cuts through a ton of little wicks here. And it cuts really through 2021. And I would like to call it a multi-year inflection point, multi-year support zone. And the reactions are just really across the board there. Whipsaw reactions, false break-in, breakouts, overshoot, momentum fueled overshoot level, key levels to watch. And we completely to the button bounced right off of it. So bear traders, short sellers, they want to see a solid daily candle close breakdown below, which would, in my opinion, offer an objective entry add-on to your existing short position. Whereas we had a nice clean breakdown on the 26th, followed by a back test, really to the button there, and was rejected pretty impulsively. Had a nice clean counter trend snapback rally. And here we are, just honing in up above. I've added this new reactionary primary high downtrend line off the 2021 November reactionary highs. Again, just a multitude, a string of reactionary highs to help strengthen the validation of that primary uptrend line. And then ultimately a move right back up to it would, again, offer an additional objective entry short. And then we could potentially have that exaggerated, close to exaggerated, even if we pop it slightly, and then retap the bottom of that 15,486.30 primary resistance there zone, coinciding with that primary trending range. That could put in and spell in a nice clean divergent high with the negative and bearish divergences, marginal new high, and then again have those near-term divergences. We already have oscillator divergence that has just continued to construct here, going back since August of 2022. Same with the moving average convergence, whereas we slightly burned it off here off the RSI. So again, just a much larger divergence that has continued to construct confirmed negative divergences, and only time will tell if we snap that level. But if we snap that 14,871.48 price support, I would only suspect a pretty decent amount of stops to go off, margin calls, whereas we have a nice clean bearish crossover here on the moving average convergence that's confirmed here. But again, these are just your levels. Bull traders, dip buyers, they want to see a solid breakout right back above that primary reactionary high downtrend line to just burn off those divergences conclusively and just have a big short squeeze of the upside, I would only suspect, and then a march right back up, potentially to the top of that trading range in a retest for the all-time highs. Speaking in terms of the fundamentals, we had Chairman Powell make a remark about engaging in a hypothetical battle with the Federal Reserve in response to a question about market responsiveness. He expressed complete amusement at the notion, joking about the markets betting against the Fed. And again, he just completely joked about the entire situation, whereas he completely holds the belief that additional regulations are completely imminent, propelled by the strong dynamics of the labor market and the dot plots that reveal a robust majority favoring the implementation of two more successive interest rate hikes, possibly occurring in the upcoming 2 consecutive meetings. So again, just something the markets would not be pricing in if they fight the Fed here. And again, the old saying is never fight the Fed. Whereas we have the oscillator moving average convergence histograms to print red candle closes below here as well. So again, just a minimal damage here in some of the technical momentum indicators. Whereas now I want to deep dive into what is the largest component and ETF to the technology sector with big weightings in Apple and Microsoft. Whereas we have a pretty large volume profile zone up in this region where we have just an assortment of bearish candlestick patterns, where you have a dragonfly, which you would call a nice clean. This is one of the most well-defined dragonfly bearish doji stars, whereas you have an additional bearish doji star, and this is what I really like here, completely well-defined, a falling, which you would call a beautiful aesthetically looking falling 3 method, if not 2 method, falling method pattern, bearish continuation pattern. You have your nice clean first rejection followed by two green candle close prints and then a nice rejection there. So again, sometimes some of these bearish candlestick continuations patterns can act as a weight of resistance for a move to the downside. And then we'll take it off into the weekly interval, take you out. And again, just nice clean bearish deliberation continuation pattern here where the momentum is clearly waning here, as good as you get, which almost transpired and transitioned into a what you would call an evening doji star setup. Would have been a lot more nicer if we got that clean candle, a solid weekly interval close below there. But again, that's still a fourth and inches moment of defining what that what an evening doji star setup looks like there. And again, the momentum has clearly waned. I'll put some key levels here to watch, and here we are. We have a potential double top right off the 177.04 price resistance, and again, just a nice pullback, a 5% drop back to the primary reactionary low trend line off the January 2023 lows there. Again, a multitude of reactionary lows across the board, and that would be a nice clean, definitely a nice clean drop to the downside for a tradable short trade setup. And if we snap that primary uptrend line, if we snap that level with a solid weekly candle close below, I would only suspect a pretty large move to the downside there with some key levels to watch. But again, we are just at a key inflection point where we've already tagged that resistance for a potential double top, and only time will tell if this could mark a near-term topping pattern, whereas bull traders, long-term investors, they want to see a nice solidly weekly candle close above that 177.04 price resistance for a march right back up above new all-time highs. But if we get rejected here as well, then you're going to put exaggerated, which you would call exaggerated bearish and negative divergences right across the board there, and that would be a very nice clean setup, especially if it ends up being rejected there. Weekly bearish crossovers in these technical momentum indicators, and again, you'd have a nice clean big divergences on all three technical momentum indicators that have just continued to construct and establish going back since the peak highs of November 2021. And sometimes the larger the divergences that build, the bigger the drop. So we'll see what happens. We'll see if the markets continue to fight off the Fed, or if we see the world's most powerful man bring an end to the rally in the markets.